Welcome, welcome, welcome. We are live. It's our first edition of the live YouTube. Very excited. Did a little upgrades, a little change of atmosphere. We're upstairs in the office, the lab, where all the research, where all the due diligence, the analysis goes down. And I'm excited because I'm going to share with you some interesting concepts about my thesis. If you've been following this channel so far, you know you have a pretty good understanding of where my thesis is, where it's at in relation to the crypto investment side of things. So this is a new language. Cryptocurrency markets, blockchain technology is a new frontier. We're in the Wild West, and it's a new language. And so I'd like to help you all achieve what I call crypto fluency, where you learn a little bit, you learn a couple words, you learn a couple concepts, a couple topics, and all of a sudden you become fluent in this complex world of crypto. Okay, because there's a fantastic opportunity right now for us all to take advantage of. Unlike anything, as far as I can see, like the world has presented in the past. So this is a completely new atmosphere. And with that comes great risks. Okay, the stakes are high. And let's talk a little bit about risk reward. Before we jump into today's agenda, I'm going to release my portfolio, a model portfolio for you all to see in real time. We'll be updating that. But before we get to that, let's talk about some risk reward. What are we going to be talking about on these live videos? A lot of what we go through might be boring, okay? It might be run of the mill. It might be stuff that's not that exciting to most of you out there. I know it wasn't really exciting to me when I first started this journey. I don't like reading white papers, right? White papers is something we might go into. We might be looking at some white papers to prove my thesis. We might be looking at some charts. The first time I saw charts, it was off-putting, boring, didn't understand what it was. And so that's the risk, right? The risk is, what is the risk of exposing yourself to this content that might in the end give you boredom? That's the risk, right? The risk is your boredom. And in my view, the reward is that you gain tons of knowledge, that you actually learn and you become educated, with this opportunity that's staring at you right in the face, whether you realize it or not. This wave, this cascading disruption of cryptocurrency markets, blockchain technology is here. It's rolling through, whether you like it or not. Okay, so I'm going to try to help distill a lot of this down to granular third grade level for us all, right? Because we need to understand what this is. Okay, so that's the reward. And in that equation, where's the money lost? There's no money lost in researching a little bit of stuff, looking through some charts, and that is advantageous to us, right? For just jumping right into something. Throwing a Hail Mary into something is not what we do here at Derek on Chain Crypto Fluency. That's gambling. That is a zero-sum game. Okay, so there's some strategy. We're going to be proving the thesis, and let's get into it. Let's jump into it here. I'm trying to navigate this new live stuff, so I might not mess this up. It might take me a few videos to get things sharpened up. So let's go with where we are. Okay, so here's the agenda. Here is our agenda. Today's agenda, February 16th, 2024. We're going to be going through my thesis on Cardano. Okay, so yes, I'm bullish on Cardano, right? I know that might sound crazy to some of you out there, some newcomers, Cardano practitioners and developers and people in the space who are watching this. Of course, it's no surprise to you all. But for the average person, people aren't really bullish on Cardano as much as they are some other cryptocurrency projects out there. And I'm going to give you my reasons why as we journey along through these live streams. And so also what we're going to do is we're going to go through my personal journey in the crypto space. That's kind of going to happen at the same time, my thesis and my journey, kind of proves how I got into Cardano. And then at the end, we're going to go through my model portfolio revealed, and that's going to be nice. I took some painstaking time to go through making some charts for you all on some spreadsheets, and we're going to be able to look at my numbers, my positions, my assets in real time. And so if you're watching this now, this could be of some great value to you. I wanted to do this last bull cycle, but never really got the chance. And so here I am taking a crack at it. So let's get into it. Let's get into my little thesis. Okay, so 2012. 2012 is when I first was exposed to Bitcoin in November. Okay, Bitcoin was fluctuating at this time $10 to $11 per coin. I was sitting at a cafe. I remember it like the back of my hand, right? I remember it like it was yesterday. I'm sitting in a cafe at Saxby's, University of Penn campus, Philadelphia. Okay, I'm doing some other business stuff there, nothing to do with Bitcoin or blockchain or anything like that. I'm researching something online on YouTube, and I come across an ad video about Bitcoin, in particular about mining Bitcoin. And I had never heard of Bitcoin. I didn't know what it was. I spent about an hour then tangenting off to the side and going down the rabbit hole of what this was, if there was an opportunity. I thought that there might have been one, but due to the complexity of what I was trying to wrap my mind around with the mining, mixed with how difficult it was to actually like capture Bitcoin at that time, like there wasn't the abundance of exchanges that there are now, led me to just pass that off. In my exposure in 2012, $0. I didn't take advantage at all. Man, what would it have been like if I put $1,000 into Bitcoin at that time? Or right, it's like crazy to think of that, but no, didn't do anything. Okay, let's move on. 2017, 5 years later, almost to the month. Okay, I am flown to LA. So I flew to LA to take a entrepreneurial course about expanding small business, about lots of different entrepreneurial techniques, and went to a seminar. It was an all-weekend seminar, and this is where I was reintroduced to Bitcoin, and also now the concept of altcoins, right? Which is something I had never even known about during 2012. There was no altcoins to be had at that point, right? And so there was about 800 people at this conference, and man, 90% of them were there for blockchain. Now, there was blogging, there was drop shipping, there was online stuff being presented at this conference. And so a lot of people were there for the blockchain presentation. This is where I understood the magnitude, okay? I was shown Coinbase. I was shown the price of Bitcoin again, which staggered me. Now it was around $10 to $11,000 per coin, which is bizarre to me because, you know, it's almost like 5 years to the month later, I'm confronted with a number that is 100,000 times almost to the T of an increase. Okay, so I was encouraged through some of the fellow members that I was becoming familiar with at this weekend summit to purchase my first exposure to Bitcoin. Okay, $33 is what I put down because I was extremely skeptical still. There were people on stage saying that they turned $100 into $1 million actually through Ripple and XRP and some of these other tokens. And remember, this is nothing I say. You read the boring description in the front, but the disclaimer is serious in that I'm not trying to solicit any buying or selling of cryptocurrency assets, NFTs. You got to do your own research. DYOR, Dior, if you want to say, not the brand, the clothing brand, DIOR, DYOR. Do your own research. I hope that you would add this to your research as gaining your knowledge base before you ever pull any triggers in this extremely volatile, high-risk environment of cryptocurrencies. So now I'm 2017, $33 in the game. I'm in the game. Okay. And so let's keep going here. 2018 now. What do? I begin to educate myself. I go down the rabbit hole. I'm dollar cost averaging in. I'm reading the Bitcoin white paper. Oh, and at this event that I went to, you had the opportunity to actually pay the piper a little bit to join a mastermind that lasted 18 months long. And so for every month, for 18 months from that very weekend that I went, the very next month I went again, and for 18 months I went and I learned from very savvy cryptocurrency enthusiasts, developers, some founders of some companies, ex-Wall Street traders who left Wall Street trading stocks and all that to play the volatility of the crypto markets, and they found great success. And so I began to learn what the blockchain technology actually was, that it wasn't just this like funny money internet coin, that it had a lot of depth, it had a lot of purpose involved, and a lot of what humanity was trying to accomplish as far as financial transactions or financial communication between peers to peers that we've been trying to conquer for quite some time. So I'm reading the Bitcoin white paper. I'm dollar cost averaging now, $33 here, $100 here, 33 here, et cetera, et cetera. For some reason, 33 is one of my lucky numbers. So I did a lot of that. I gained more knowledge, okay? And my exposure across that year added up to around $13,000, okay? 2019, same thing. I'm just dollar cost averaging, 33, 333, 100, and every now and then, if I had like $1,000 saved up, or if I got holiday money, right, savings, I was eliminating expenses. I actually went down to one car for a while, and it was, sold a Rolex. I actually had a Rolex, bought a Rolex because it was like a holy grail type of thing that I wanted to have for myself in my life, a Rolex. I actually sold that also, put it into the crypto markets. I started to take a little bit of my savings that I'm like saving up and, considering whether or not it would be appropriate to bring it. Was I saving it more substantially in the crypto markets, or was it better in my savings account? So I started to like toy with that stuff 2019, and my exposure grew to roughly $30,000. Okay, let's keep moving on. Then what brings us to 2020. In 2020, what happened was I developed a new thesis, like a thesis that came out of nowhere, that was not a popular thesis, that actually is still a thesis that I drive forward with to this day. This was one of the greatest decisions I had ever made. And back then I wanted to really share this with you all, with community members, with as many people as I possibly could, kind of like I'm doing right now, but I didn't have the time. I didn't have the setup. I was in another business, and it was right around when COVID happened too. But by the end of 2020, I fully acted on this thesis. And what it was that, okay, the popular method of investing in back then in the earlier days was to have like 75% of your portfolio be Bitcoin, 15% be Ethereum, and then you can dabble in the rest of the altcoins, chop it up however you want. And so that was pretty much the golden standard. That's what I followed. And then my thesis was, Cardano had been one of the altcoins too. And in my due diligence nature that I have, where I really want to understand what I'm doing when it's whatever I do, is I'm going into deep dives onto every single one of these projects. So I'm reading the Ethereum white paper. I'm looking at all of Ethereum, the entire world of Ethereum, going into EOS and Tron and Ripple XRP and Cardano and Neo, Augur. Man, there's so many. Stellar Lumens. There were so many little coins in my portfolio at that time, just little bits here and there. And when I continued to look at Cardano, it stuck out. Okay, it raised itself amongst the crowd for, I always tell people, thousands of reasons. And with every single video, I'm going to put out a reason why. And so maybe we'll get to that in the next video. My first reason, a little sneak peek on that, what that reason is, but it was security, okay? Because most of the harm that's done in the crypto space are in the form of rug pulls and like bridge exploits and wallet hacks and stuff like this. And I actually have a video about hacks and rug pulls in the regular videos. You can just check that out. So Cardano was different. It's a third generation blockchain, and it really gave me some confidence from a securities perspective. And that has been the bedrock of the thesis. Okay. So people thought I was absolutely nuts. They couldn't understand what I was doing. It's funny because nowadays people are making that decision. I see more and more people naturally considering these other measures rather than just being like this Bitcoin maximalist or like this Ethereum maxi or whatever, right? So, and now my exposure is around $50,000. Okay. That sounds like a lot. It is a lot. I mean, that's a lot. That was like everything for me. I mean, every single thing that I ever could really spare to the finite measurement of being able to pay my bills practically. And so that's 2020. We're moving to 2021, and there goes a bull run. Okay. Half of what I do is invest, and the other half is really do the technical analysis of things. And so during my training, or I guess you can call it a training, this mastermind that involved many things, blockchain technology being one of them, taught us about the cyclical nature of cryptocurrency markets. And they have this 4-year cycle. Now, we can go into the deep depths of that later on in other videos, and I'm sure we will, where those 4-year markets are actually broken down into like 60-day cycles, with generally the bull run being like a 3-year progression and the bear run being about a year, right? Give or take. But the bull run kind of happens like sideways. It's slow. It's like still like a painful, it's still the residue of the pain from the last bear market. And then the structure of the bull market changes and continues on for roughly like a 3-year period to where then the bear market goes down for a year. Okay. And those bear markets can be devastating. They're like 90% decreases. And that's where this volatility narrative comes from. Okay. But we were ready, right? We were ready because when I first got in 2017, it was at the height of that last bull run. And I was able to kind of witness all that happen and not have a lot of exposure at all, right? I was just kind of learning a little bit, but then I understood that we were going into this wild bear market. And so for that entire time, I just learned and continued to understand that bull run action was likely in this 2021 area. Okay. And so that's where we went through. And that brings us to 2022, where we went into a bear market. Okay. November, realized in 2022, we realized we could be near the end of the bear, but we needed confirmation. So when a bear market is moving into a bull market, you need confirmations. Okay. You need technical analysis confirmations, and you need more than one confirmation. So, right, that's topic for another video, but we needed that other confirmation. And then in 2023, in January, we really got that confirmation at the end of the bear market that the structure was changing. The sentiment was changing from the bear aspect to the bullish aspect. And many disagreed, but we're sort of confident with what we were thinking about and how we're strategizing the markets and our technical analysis that relates to cryptocurrency markets, which is far different than what you see in traditional markets, okay, stock markets and option markets and what have you, right? It's a completely different animal. And so here we are in 2023, witnessing the beginning of this structure rechange, and that brings us to here and now. And where are we? Okay. So what I'm going to do is I'm going to tell you, we're going to go into my portfolio now. We're going to see the positions and where I'm at, and I'll kind of describe these charts to you so you kind of understand what you're looking at here. Okay, so let's go into the channel. I hope this is all set up correctly. Nope, that's back to that. Oh, our channel timeline. Great. We're going to our portfolio summary. That's right. Okay, here we go. Here's the portfolio summary right now. Okay, what you're looking at is, see if I can, yeah, that's okay. That's pretty good. Okay, so you see ADA up here. ADA is up at the top, and what I did was I allocated the portfolio such that it represented $200,000 worth of ADA. So at this time, when I did this on the 25th of January, coming up on almost a month ago, at 47 cents, 423,583 ADA equal that 200,000 mark. And so this is the model portfolio here. And what you see below, okay, are these CNTs. What is a CNT? A CNT is a Cardano Native Token. And you're going to see them just listed 1 to 24. Now, I'm not showing you the actual assets here. One, for multiple reasons. One, I don't want to sit here and encourage you to just like write those assets down and go ahead and like feel like you should invest in them or whatever, because it's not about that. I do have crypto fluency. I do have a website, cryptofluency.io, where you could become a member of ours. All right, you could become an OG member. It's $47. Where you will see the reveal of my entire portfolio. Okay, so maybe I can show you that here. Let me show you that. I'll show it on the next video, Crypto Fluency. Okay, and so just so we can see that what we're looking at here is all of my assets. So there's 25, ADA included with 24 others. These are the tokens, okay? These are the prices of that very time, and added up to about 579, 197. Okay, that's exactly what that comes up to. Now, I wanted to do this earlier. I had this earlier for the beginning of the year. It was around $500,000, and so because this is like really difficult for me to put together, I'm not really a technical guy actually. It just took me a little bit to put this together, as you'll see when we get into other charts. But here we go. Okay, so this is like, to represent that when I'm speaking about these subjects and these topics, I'm speaking at it from a place of experience, and the past 7 years of what I had to go through could be of value to you. Okay. And what we're going to look at now is so we can track this. So now what I want to do is track this portfolio with you all over the course of the next 18 months to see where we're at. Okay, so what you're looking at now is the date, 125. This is exactly what we just looked at before, where we had that 579. And so every time that I do a video, or so we have the 26th, we have the 31st, the 1st, the 2nd, the 5th. So I'm not doing it every single day, but every single day that I do a live video, like today I did it, I will update this directly before I do a video, so everything is current. Okay, so as you can see, the portfolio growth tracker is on a nice little track. So I put a little chart over here together where we're tracking that portfolio with every plot that we put in. And I actually have something called, we're going to see, it's called off the chart down here. Off the chart means when the price of the portfolio rises to where it would go off the chart, we update the chart entirely to see the progress over time. Okay. And so I'm going to go back here. We're going to check out off the charts. And so this is where I took every single one of these assets and put their own little chart here. Okay. So we can see which one of these, oh, if I can make this like 90 something percent, 90, like 5%, what does that do? What does that do? Huh? If I put like 90%. Okay, 90%, so they're all on there. Okay. So we have Cardano Native Token 1, 2, 3, all the way down. We're tracking these. We're tracking these assets here. Okay, and so one of these, so it's split 50-50. Every one of these charts was started to represent that the space to double or to go to complete zero is like equidistant. And so my hope is that many, if not every single one of these charts will be off the chart, and not just once, but maybe several times. And so we're going to color code these charts in such a way that every single time one of these token projects goes off the charts, it will represent a different color now. And then when it goes off the chart again, if that happens, there'll be a different color code. And so you'll be able to see that in the future, lots of these charts will have different colors so that we can track what is going on with what. And like I said, if we went to, it's always a risk to do this stuff in real time, right? We're going to try this out. Okay, here's our website, cryptofluency.io. And so good. So I got that up there. Now, if you want to see, if you want to know what all these tokens are, okay, just because I feel like I give a lot of stuff out for free and I love giving value, but there has to be something that we agree upon for you to see this entire portfolio, right? I mean, if I just had all the things up here, I would feel irresponsible that you would just snapshot all of them and then go ahead and like just dive in deep. I want to know that you're serious. Okay. So for the beginning, we have a little website here we put together. I have this button up here called OG membership. If you want to become an OG member, where you'll see my full portfolio, you're also going to get real-time notifications of all the market moves that I make, because that portfolio there only represents about half of the assets I'm exposed to. So 50 assets is my exposure. And there are so many moves that you go in and out of, and that's always changing. And to become an OG member, you're going to get that real-time access to those moves, like a notification. Prompts about ISPOs, launches, and NFTs, exclusive weekly summary videos. I'm going to be putting out weekly summary videos that are exclusive to the OG members. An option to submit questions for AMAs. Everything in your inbox is simple, right? We're not going to go through the process of over emailing you or anything like that. And you get all of this. You get all of this understanding in insider baseball for 12 months. Okay, so we're going to do this. The first 1,000 spots, we're just charging $47. I mean, $47 for this information. It's like, I don't know, don't go get coffee for a couple of days and that's $47. I mean, honestly, the group that I had to pay in to do that 18-month thing was $5,000. And there were several other payments that I'm not even going to talk about right now because I feel like it was like way more expensive. But then when I look back on it, I'm like, I don't know, it did change my life. And so, yeah, so it was worth it. Right, this $47 mark is not going to be here for long. Again, I'm going to raise this up to like maybe $470. Definitely this information is, to me, it's worth $5,000 at least. And so you just kind of get instant access. You click the button in real time. I'm sort of testing this out. I don't know how it works with Ecamm here, but you're going to just put in, your email, right? State of the art. Place your order. Boop. When you place the order, you're going to get a welcome email. And then you're going to be able to log into the dashboard. Okay. So that when you now come back to the website, you'll hit that login button and be able to log in. All right. So, and where my full portfolio will be revealed in real time. There's also a blockchain blueprint course there so that you could see all of that information where I go through the industries, all the industries that I think will be affected, which, by the way, is like every single industry, to be honest. Let me get the main camera back on. Yes. So it's my view that every single industry is going to be affected by the cascading disruption of blockchain technology. Back in the early 90s, before the internet, we didn't have the availability to do a video like this or to even communicate. And so the internet helped us all communicate with each other, right? So if you wanted to send a letter to somebody, a message, a note to somebody who was like across the country, let's say, and you wanted to do that, it was going to cost you a lot of money to actually send that letter overseas, not to mention a lot of time. And if you wanted to send that same letter to someone who was in like Japan or Africa or somewhere, or even like Florida, if you're like where I'm in the Northeast, send a message down to Florida or California, it was time and money, right? And now with the internet, the technology of the internet allows us to do that in real time, instantaneously, multiple letters, the same letter sent to all these different people, not to mention every other thing that we do. Everything that we do and we live within our lives has something to do with the internet, right? It's almost like you can't operate without the internet now in many respects. But during that time, it was like difficult to understand, right? So businesses didn't have websites. Really, like HTML came on and it was like a static web page, and then JavaScript came up to where the regular people can actually create their own websites. And slowly but surely, every single solitary corporation, government, mom and pop store, large and small, pretty much functions on a website, right? And it solved this massive need for humanity to connect with one another. So social media platforms come out, and the list goes on and on and on. Well, what is blockchain technology? Blockchain technology is an upgrade of this entire internet, right? So right now it's like Web 2. It was the World Wide Web, Web version 1, then Web version 2 comes out to have all this other applications and different languages that the common person could use to start their business or create their website. Right now, it's easy to do a website with Squarespace and some other companies out there that you could just kind of plug and play and begin a website. And so it's been so long in this Web 2 space, and there are a lot of problems. There are a lot of issues with security, with data security, and financial security, right? So cyber security is huge, where every single company out there needs to pay a middleman for cybersecurity work, right? I was around a group of JP Morgan investors, and we're talking about NFTs, we're talking about cryptocurrencies, and I asked them how much they spent on cybersecurity. This was just like a local private bank near where I live, and they said upwards of $600,000, I think, for half the year for cybersecurity. I mean, right? And so what is blockchain technology? Not only does blockchain technology come with new languages that make a lot of these other languages look like the rotary telephone in lots of cases, or like a black and white TV. So it not only styles things that we will see on the internet differently, with more depth, with better UI and UX, but it also helps us cure this communication of financial transactions that is still like it was back then, where we were just passing things across, sending letters across the continents with time and money, right? So now if you wanted to send money, there's a guy at Trader Joe's, right? There's a Trader Joe's nearby. Guy works there. He's from Africa. He sends like 70% of his paycheck back home. For years, we know this guy. Every time we go in there, he's an amazing dude. And he's like, we have a great relationship with him now. And he tells us, and it stinks because they charge him a lot, right? They charge him a lot to send that money down to his family. And so there's a middleman still right now in today's world. And so from someone like him to a larger business, a huge corporation that's sending millions of dollars across seas, it's going to cost them a lot of money, tremendous money to do that. And not only that, but take a lot of time. Okay, so blockchain technology, with blockchain technology, corporations, businesses can send $1 billion across seas with minimal fees and instantaneously. And you can actually send transactions to multiple people, multiple entities instantaneously. Not to mention everything's on a ledger, so it's like written in the blockchain, so it can never be changed. It's immutable. It's unhackable in many ways, right? So that's another thing that's inherently built within the blockchain technology, this like cybersecurity stuff, because of the nature of the UTXO model that Satoshi came out with Bitcoin, that you can understand if you read the Bitcoin white paper. UTXO stands for unspent transaction output, and it is different than the account-based model that we are familiar with in our traditional banking accounts. Okay, so there is a block and there is a Genesis block. And so the Genesis block was like the first block ever minted, ever created. Back in 2009, when Bitcoin launched, or when Bitcoin was turned on anonymously by Satoshi Nakamoto, the first block was created. And in that block, there is a cryptocurrency, there is like data, there are several things within this block that then link the block to the next block. So with some Bitcoins and some information about the receiver, like who's like, so there's a sender and then there's like a receiver on the other side, that then the transaction goes to the receiver. And if the receiver can see where this is coming from, the transaction goes through and another block is created. And I'm sort of like compartmentalizing the block to block blockchain speech here because I don't want to get into a deep dive about what that is. I will break that down in future videos. But basically what happens is these blocks form a chain of blocks. Now, an adversary that wants to exploit a transaction, what they call double spending, what they're essentially doing is when you send a transaction, like if you're at the grocery store or anywhere, that you swipe a credit card, or at a gas station, wherever, or at a store, at the mall, and you swipe your card anywhere, there are adversaries that are trying to hack that company overall so that they can see transactions occur and actually replicate the code, because basically what that is when you're swiping the card is a series of numbers and letters and this code that kind of like goes to the third party, the cybersecurity that kind of like gets this with your bank, and this communication happens and then your transaction goes through. So there's always a cybersecurity measure when you are swiping your card. In fact, the very swiping POS system is probably from a company that is connected to cybersecurity that your grocery store works with, so that they don't have to worry about money being stolen. Okay, there was a big Target hack, and there's hacks all the time with this. And there's like these ransom hacks where they hack companies and demand ransoms and things like that. So it's almost next to, right? Or it is impossible to do that to Bitcoin, as the world since 2009 has been doing everything that they can to sit there and hack Bitcoin. It's like absolutely impossible. Why do I say that? Well, because when you're trying to take advantage of a transaction, right? When you're an adversary coming into a transaction, like I'm sending money to Bob, I'm going to have to, as an adversary, replicate the entire code or the entire chain of blocks since from 2009 and get ahead of that such that I could replicate it, duplicate the transaction or whatever, and then steal that money into my account before it gets confirmed on the blockchain, right? And I don't know. It's all to say that it's impossible. Bitcoin has not been breached since its inception, because this technology is something that human beings have been trying to figure out for a very long time. And there's a lot of work that's been done to try to figure that out with the use of cryptography. In many cases, this brings me to my theory and thesis on Cardano. See, everybody's like so bullish about Ethereum and all of the ERC20 tokens, which are tokens that run in the Ethereum virtual machine, the EVM. Okay, these are tokens that are sort of compatible with Ethereum, that will live in Ethereum wallets and such like that. And you need Ethereum to like move these tokens back and forth via these gas fees and what have you. And everybody's bullish on Ethereum and bullish on all these ERC20 tokens. And I get it. There's like thousands and thousands, and I get that they have market share. But there's something different about Cardano that is very special to me. And not many people really understand that. And so see the problem with a layer one is that, like, Bitcoin is a layer one, Ethereum is a layer one, and Cardano is a layer one. So they're all layer one cryptocurrencies. They're all layer one blockchains. And so all these ERC20 tokens are layer twos, right? And so Bitcoin doesn't have any layer twos because in its UTXO model, it doesn't allow the expressiveness to happen to create smart contracts. That's what Ethereum did. Ethereum is a second generation blockchain. Okay, Bitcoin's first, Ethereum is second generation blockchain. Cardano will be the third generation blockchain. And so because it's UTXO model, it could not express anything else except for that security, right? So that's what Bitcoin is. Bitcoin is an extremely secure store of value. And that's why people refer to it as a digital gold, because outside of the store of value, there's really no other utility. Yes, I know that there's like Lightning Network and I know that there's all kinds of other stuff. Okay. And maybe Bitcoin will be able to do like microtransactions and what have you, but there's no layer twos building on Bitcoin. Okay. Now, when that happens, what you have is a hard fork. And so you see projects out there, like right now, if you go to coinmarketcap.com and you check in Bitcoin Satoshi Vision, like Bitcoin SV or Bitcoin Cash, these are essentially Bitcoin hard forked, because people in the Bitcoin community disagree on the fact that, we need to like enter the market in a different way. They decide to hard fork the code out into their own project, and there you have it. What Ethereum did with this blockchain is it came out with an account-based model. Now that account-based model is similar to our banking, right? Where the debits and credits, the deposits and withdrawals are just like your bank account, where if I have $100 in my bank account, I send you $10, $10 leaves my bank account and $90 stays in. Okay. The UTXO model, the most basic way I can talk about the UTXO model, Bitcoin, that's different than this account-based model, different than anything finance has ever seen as far as like communicating with finances, is that, like, let's say I have $100 in my Bitcoin account and I'm sending you $10. What happens is $100 like leaves your wallet, all of that. Okay. And then $10 will go to Alice or whoever you're sending the $10 to, and then 90 come back to your wallet. So that's different than $100 you have in the account-based model, right? It stays in there, and then $10 just withdraws. Okay, $90 stayed. So that's the difference. Now, we're not going to go down that rabbit hole yet, but there's a lot to be said about that. What Cardano did, okay, before we get to Cardano, we're going to talk about, for 5 seconds, about Vitalik Buterin recognized that with this model, you could create smart contracts. And so let's thank Ethereum for recognizing the world of smart contracts. What are smart contracts? Smart contracts are self-executing contracts between peer-to-peer with no intermediary. And so this could change the world in many directions, and in many ways. And so what you have with Ethereum is the introduction of smart contracts. And so one of the co-founders of Ethereum, Charles Hoskinson, recognized that there were scalability issues, amongst many other issues, complicated issues with Ethereum. Okay, Ethereum has high gas fees because of its account-based model nature. For transactions to be validated on the blockchain, it consumes different energy standards than Bitcoin. And so this was a problem. So Charles Hoskinson came out with his theory and his thesis, not just him, but there are 3 founding entities of Cardano. IOHK, which Charles Hoskinson is a part of. You have Emergo, and then you have the Cardano Foundation. And so Charles Hoskinson went away and spun up Cardano. And what they figured out was how to keep the security of the UTXO model, the unspent transaction output that Bitcoin is so profoundly known for, but to create the E. What's the E? Extended UTXO model. So Cardano has an EUTXO, which is that keeps all the principles of Satoshi's vision, okay, with that UTXO, but extended it to allow for smart contracts. And it is brilliant when you dive into some of the papers that Cardano has published. And so that's another reason why I was drawn more and more to Cardano. They have a lot of scientific peer review papers written, over hundreds now at this point. And they frankly, they take a scientific peer review approach. You can't say that for any other blockchain or technology company out there that exists right now. Most of the big tech companies, in fact, their motto is move fast and break things. And Cardano is like the opposite. It's paving the opposite path because they take security very seriously. And that is my number one reason why my thesis on Cardano is strong, because of security. So if I can ask you the question, how much room for error, okay, how much room for error can you allow for a jet engine to fail? It's like zero, right? There's no margin for error when it comes to a jet engine, because you're literally talking about human beings' lives. So Cardano took this same exact approach to margin for error, meaning they cannot afford any error in the production of their technology. because it is our lives. When we're working and we're putting our money, it's like our money is our life. And if your money gets like swept away from you, it literally can kill you. It can destroy you. And so Cardano takes that extremely serious. Putting all of their code open source, everything's open source, and it goes through scientific peer review process. So scientists and mathematicians and scholars from around the world look at that, right? They look at it hardcore, and they vet it, and they scrutinize it, and they criticize it. And they, going through that process, have collaborated an incredible diverse team of engineers, of developers, community members that have chimed into the power of what Cardano is. Now, they don't take venture capital. That's a negative. They're not popular in the sense of being out there and exposed with the TradFi world, the traditional finance world. They're literally growing organically. They're going slow. They might not hit their roadmap items in real time, but if you continue to watch the progress, it's immense. It's incredible. Okay, so that's really the theory and the thesis of Cardano. They're awesome. They're really doing good, but that's just my opinion, right? I'm bullish on Cardano. And when in 2020, when I made that decision to migrate everything over to Cardano, I knew that Cardano native tokens were on the horizon. At that time, Cardano was being slandered for, oh, this is a ghost chain. This is a scam. Charles Hoskinson is crazy, and the whole team and IOG. And I didn't see it that way. I dug into their papers and read everything for myself. I knew that the Shelley hard fork combinator event was coming. And so that's another. Cardano has what they call hard fork combinator events. So when there needs to be an improvement to the code, to the protocol, there are SIPs, Cardano improvement proposals, and hard forks can happen as a part of the network upgrade. And so it's backwards compatible. So every single upgrade that happens is backwards compatible to all of the previous technologies out there that they've created. Okay, so my mind's saying, okay, you need to stop, Derek, because now I'm going to go into like how they became decentralized and how they're the first ones to really achieve on-chain governance and how they're the first blockchain to really tackle interoperability, right? I don't think we know that either. It's like I had all these assets on like exchanges and like a wallet here or whatever, but the problem was I don't want to leave all the tokens on the exchange. Like we all know what happened with FTX. All those people lost their money because they left it on an exchange. Well, it's better to take your assets and bring it into a wallet where you can hold the keys to those assets yourself. And I wasn't comfortable and secure with what was going on. And so through research, I understood that the Daedalus wallet that Cardano had just came out with was a really secure solution. And so the fact is, if you have, if you're investing in all types of different tokens, like you're just investing in a plethora of them, and you have ERC20 tokens on the Ethereum side, and you have Ethereum, you have Bitcoin, and you have Cardano, and you have Tron or something, these other blockchains, Polygon and Matic and Avalanche, Solana, you're going to need different kinds of wallets because in today's age, we don't have interoperability. So I can't like send something from Solana to Ethereum or to Polygon to Cardano. I can't put Bitcoin on my Ethereum wallet, straight Bitcoin. Now there's wrapped Bitcoin and all that, and I understand. And there's wrapped assets where they, that's a whole other topic there. But who is focused on interoperability? It's hard to argue against Cardano. And Cardano is paving the way because their code, their Ouroboros technology, that's what they are. The heartbeat of Cardano is Ouroboros, right? The heartbeat of Ethereum is Solidity. Okay. But Solidity is like nothing compared to Ouroboros, right? In my view, having done the research, where Ouroboros can entertain, right? Can entertain Solidity, but Solidity cannot entertain Cardano. Now, Ouroboros and the Cardano network can entertain JavaScript, but Solidity can't entertain JavaScript. Ouroboros can entertain all of these other blockchains, but Solidity really can't, right? And so, I don't know. Where's the value there? So it's my view that Cardano will win the smart contract race and prove to be one of the leading blockchains overall. And they just came out with all of their Cardano native tokens just in 2022. At the very beginning of 2022 was when their tokens came out. And what do we know about 2022? We went through a bear market. Okay. And so none of these tokens have been able to go through a full-on bull market, right? And so that's kind of exciting because let me show you here before we get out. Let me show you if I can maneuver the trading view for a little bit. So one thing I really look at is trading view a lot of the time. Okay, so we're gonna connect. Okay, so here's the trading view. Now don't let this look confusing to you. It did for me when I first saw it. And maybe I'll erase some of these things for you so it just doesn't look so confusing. So what are we looking at? We are looking at, this is the Cardano chart, ADA. ADA is the Cardano ticker. You have AGIX down here, Bitcoin. I track a few of these. I have several accounts. It's a free account, so you might see some pop-up ads. So I'd encourage you to mess around with trading view. But I'm going to take you to, let's take you to the BLX. This is the Bitcoin Liquid Index. I got the 1 week on here. And this chart here, I was shown again from my my advisors and mentors. This is the, you could search it yourself in the BLX in TradingView. This shows the most history in the Bitcoin world. And so what I want to show to you, actually set this up 4 years ago with these bull and bear markets. And what I'm going to show you here, we don't really count this first one, okay, because it really goes way down. But if I were, try not to knock anything over here, my new little studio setup, let's just take this measurement tool from right here. Let's take it from this and measure it out. Okay, so what I'm going to do is I'm going to line this line up with the bottom here. Okay, and I'm going to line it to the top. Okay, so you see how the top of the bull market of the 2014 bull market rested at about, where was it about? Yeah, so right, so where do I have this at? I have it at around like roughly $970 or something like that. It went to like $1,000. So it goes from like $2 or whatever, okay, to like $1,000. Now this was 44,000% increase, right? And if I go from like the nickel mark, you know, it's a guy, Trace Mayer, I used to follow back in the day, who bought it at a nickel. And we go to, see, it kind of interrupts. So when I go over here to these boxes, it doesn't like let me set the range exactly where I want to, so it jostles it. So I move away from the box and I just have that line up, right? And then I create the measurement tool. Okay, so it was like 36,000% from that point, 44,000% from there. And if we go from this like inception point of like late 2010 from that nickel, and we go all the way over here to that top over there, right? I'm calculating this top. Okay, we're at about $1,100. Let's make that a little smaller. So we're like at 6 cents to about, you know, 971. Okay, so if you would have bought Bitcoin here in 2010 or whatever, and it goes up to 2014, wow, 4 years, your investment would have increased 1.5 million %. What? 1.5 million %. Jeez, that's like wild, right? Oh my goodness. And this was when I first kind of ran into it, right? Like was it the November of the 2012 mark? Yeah. So, right. So October, November of 2012, as I stated in my, my timeline in the beginning of the video, it's like 1089, right? You can see to the side here that it was like 1089. So right now, let's calculate this next bull cycle as far as price increase, right? So again, I'm going to move out here, but I'll just show you that the line I'm lining up is around like 200-ish so dollars. Okay, and that went to $20,000 that time. That was like incredible, right? So about like 19,937. So as you can see over here, where I started that range tool was $208, and then I scaled it up, and so the blue tickers are that range tool, 19,337, and so that is a 9,000% gain. Okay, so we went from like 40,000 to 9,000%. All right, and we're moving right along. We are going to look at this next cycle. Okay, we're going to isolate this next cycle. All right, we're going to isolate this next cycle. Got some white space here. Okay, so it goes from 20,000 all the way back down to like 3,400 or 3,300 there. We'll take it from 3326. Okay, and I'm gonna draw it out and get it back here into this white space, but I'm gonna try to line it up with that next top of, let's say it went to like 65,000. Okay, so let me move this around here. Okay, so this was the next leap up, right? And so we took the measurement tool from 3,300 to 65,000. That gave you, if you would have invested down here, you would have caught it down here and sold it up here or whatever, you would have seen a 1,855%. So do you see the trend? Right? Although Bitcoin is rising, the percentage increases are diminishing, aren't they? This was my thesis. Okay, this was my thesis. I said, okay, well, what is it like if I literally have all my money in Bitcoin and it goes to like 250,000? Okay, I mean, that's a good gain, but what if I'm in some of these altcoins that are like 2 cents and the price goes up to like $3? What's the difference there? Okay, and so here we are in our current zone, where we're looking at some sort of local top. Who knows when that'll be? And I have a traditional Bitcoin model. This is just the Bitcoin. This is on Bitstamp, right? I actually choose several exchanges to create my charts on. And so who knows when that's going to be? Who knows where and what that's going to be? So is it going to be up here towards 300,000, or is it going to be like 150,000? So here's my little box of a target. Now you might be asking yourself, well, why are you tracking Bitcoin, Derek, when you're bullish on Cardano? I mean, as of today, Bitcoin is the mover. It is the OG. It is the one that is moving the markets. And so where other altcoins go, or where Bitcoin goes, other altcoins follow. Okay, and so when you look at other charts, when you look at like Cardano, for instance, and I scale it back to size, it kind of looks similar to the bull run that Bitcoin had. So you can see I have more indicators on this chart here because I'm measuring. This is a measurement from, like, for instance, the last low to the high. And so I can kind of measure that out to sort of project where this next high will be and the prices. You know, I have, I think, like 33, right? My lucky number way up there at the top to a bottom of like what, $3 was the previous all-time high. Okay, so if we look at the price progression of Cardano, and we come down here and we take a little measurement tool from, let's say, where's that at? Okay, like 2.5 cents, and we move it up to $3. Okay. Oh, that did not take that. It actually started to measure from 7 cents. So if we're trying to take it from that 2 cent mark, okay, see, because I have these other boxes. So let me just move this away. Bear with me as we measure this out. It's like so funny. You'll see when you mess with TradingView that it takes a little bit of time to get used to, and even somebody like me who has a lot of experience with it, it's still a little finicky sometimes. Okay. Wow, it still took it from up there. Let me like go way over here. I hope you can see that the dotted line, although I'm way to the left, represents that it's like 2.2 now. So I'm gonna hover it right at 2.5, okay? And we're gonna go up to this $3 mark. Okay. $3. So that was an 11,000% gain. Okay. The last bull run on Bitcoin was 1,800%. This is 11,000%. Okay. We're talking about from this time period here to this time period here. The same as Bitcoins from here, right, to here. The same time zone. See, it's kind of like the same. But my theory was that maybe altcoin would have a better performance. Okay, and that proved to be the case. Now I'm, because this was like the first real bull run, and so now I think that the rewards will diminish. Okay, like we said with Bitcoin. But what I want to projects like AGIX, for instance, if we can get into that one. It's giving me a little trouble. Look at the smallness of this chart. It really didn't go through anything yet, right? It didn't go through any bull run yet. So let's look at AGIX. You know what I mean, like from right where it's at here. You know, every time you move it, I don't know, like whatever, $54. Is that like ginormous? Yeah, it's a lot more. But what I'm saying is to even measure what a native token like AGIX can go through, which is a Cardano Native Token. It's one that was actually born on the Ethereum chain that migrated over to Cardano because of the utility of Cardano is actually more advantageous if you're a developer in many cases. But a lot of those tokens, those Cardano native tokens, have feeds that are less than this. They have not experienced a bull market yet. And so I asked myself the question, what would it have been like to capture Bitcoin in the very beginning and ride that up? What if I made that decision in 2012 to get into that Bitcoin? It would be so different. My life would be so different now. And those questions led me to this thesis where it led me to Cardano, not just for that purpose of gains, but for the purpose of security. Not only that, like I said, there's thousands of reasons that Cardano is much more energy efficient for the world at large. There's so many more reasons, but that they would one day, Cardano, their native tokens that would then go on bull runs. So here we are, right? Here we are right now. Here we are in our Cardano native tokens. And we're tracking here at this channel 24, right? 25, including ADA. ADA's over here, right? And we're tracking these right now in real time. How much is this one? This one is 20 cents. This one's 2 cents. Okay, 3 cents. Where did I get Cardano? I got Cardano at 2 cents, 2.5 cents. That's where I came into Cardano. Well, this project's 2 cents, right? Where's Cardano now? Okay, it's at 50 cents. I think 60 cents right now it's at. So I'm up from 2 cents, right? Even though it's at the very low of this bull market. So what is this one? This one's at 7 cents. Okay, some of these are like way low for different reasons, like tokenomics reasons. We're going to get into geeking out on some of these measurements as we move forward. Okay, but as we can see, the portfolio has been steady. Okay, it has not gone up every single time. Like went down here and it went down, and I expect it. That's why I want to track this. It's not that it's going way up in the direction, but what I want to say to you all also is that I'm not in this to like scalp gains and to get the Lambo and all this crazy stuff that you see on social media. I am into Cardano because I like the project. I feel it is one of the most advantageous projects to the world right now. I love participating in the governance of Cardano, in the decisions that Cardano is making. You as a token holder can vote on these projects, and it's like a wonderful experience. And I believe in the project, okay? And so I want to track and show you all that it's not about, like I have friends that look at this and they're like, oh my God, why don't you sell? Well, when the time comes to sell, I will allow my members to see those notifications, so you can see what I'm doing in real time. Not that it's financial advice for you, but I'm just sharing with you, this is what I'm doing, so you could do the research. Okay. And I thought I was just showing you my portfolio summary, but I'm still in the main camera because I'm new to this live thing. So let me show you the portfolio summary, right? All these native tokens that I was just describing here have not gone through their bull run, right? And so we're tracking them. We're going to track them. And this is what I was saying. Some of these are 2 cents, 2 cents. We have ADA over here. I do apologize that I thought I was taking you through this when it was on the main camera. So I probably looked like I was like staring off into the screen. But I'm just trying to show you that like a lot of these tokens are in their infancy. That's the main point. In their infancy. They have not experienced a bull market. And so this is a long-term journey we're on. This is an 18-month journey. This is a longer than 18 months, is because there are lots of cycles to how these things play out. All right, and we're not even getting into NFTs and anything like that yet. But these are tokens that are very in their very early stages. You can't even find them on TradingView, right? You become a member, like I said on the website. You become a member. And you check in, and you try to search for these, right? Because they don't even exist yet. So that's why I actually I'm masking it here, because that's why there is a little bit of risk to it, because you don't know. I don't know. But what I will tell you is I've searched and researched and continue to research and do my due diligence on each and every single one of these 24 projects you see here. On a daily basis. I communicate with them in their Discords. And so I participate and I experience the communication in real time. And tend to see each and every single one of these go off the charts, every single one of them. And right now, as I'm putting this video out here, the first video, see, it's kind of sideways. Now, some are kind of popping up and some are close to coming off the chart, right? So you're at a good time. You are at a good time. Boy, you were at a good time. I'm so happy to have shared this time with you right now, trying out the live thing with the new microphone, and I got a little video camera up there that I'm staring into. I used to just do it through my computer with like a little lavalier mic I had from like 7 years ago. So I will continue to try to enhance the look and feel of these videos and to enhance and up level the quality of value that I'm going to put out here for you all. This is just the beginning. So if you're late to the game or you feel like you've missed out, trust me, that is false information. You should just get that narrative out of your head. You should understand that there is so much to learn. There's a lot to learn. I hope to see you learn some of that in our OG membership, where you will have greater access to member type video stuff that I'm going to be putting out there. And there's a roadmap that we're going to release on that website, cryptofluency.io, where you can see the full list of what we're developing in the years to come out to like 2027. So we're in this for the long vision. We've been in it for 7 years now. I've been exposed to it for longer than that. And so I know where you might be at, from the very beginner to the advanced practitioner, the advanced participator, right? So we're demand, I can put these types of videos out there so we could see the flurry of what's about to happen, this cascading disruption. Okay, so I hope you all have a great weekend, and we'll see you very soon in the next video. Thanks, and cheers.